Hello, everybody, and welcome to this week's show. Today, we're going to be diving into 8 types of unsecured business loans and cards that every business should know about. I get a lot of questions about this. When I look at ads on our pay-per-click or ads on our Facebook and subjects that people are really interested in, one stands out above all others, and that is how to get unsecured money. And I think this is such a major topic because so few business owners existing and just starting out have a lot of collateral to collateralize a loan. So today we're going to be diving into a lot of different kind of financing you can get that's unsecured, where you don't need collateral, where even if you are a startup, even if you have bad credit, you're still able to get unsecured financing. There's still options out there available for you no matter what your situation is. And today we're going to be diving in and discussing that. Before we get too far in, let me first introduce myself. My name is Ty Crandall. I'm actually the Chief Executive Officer here at Credit Suite. What we do at Credit Suite is we help business owners get money and credit to actually start, build, and grow successful businesses. So if we can help you at all in getting business credit and getting business financing and getting anything you even see during the show here today, feel free to reach out to us. Our number direct is 877-600-2487. That's 877-600-2487. You can also always email us info@creditsuite.com. That's info@creditsuite.com. And I've also arranged for you to get a step-by-step building guide to teach you exactly how to build your business credit in 4 easy steps. And if you do want that guide, all you have to do is just text the letters EIN. That's text the letters EIN to the number 855-982-1820. That's text EIN to 855-982-1820. You'll grab your free guide. So that's it. I'm not doing any kind of pitch today. You're not going to be sold anything. This is just going to be an hour of straight information. So let's go ahead and dive in. Well, in the business lending arena, there are actually 2 types of financing. There's secured financing. So this includes money that requires some type of asset be pledged as collateral for the loan. And there's unsecured financing. This includes money that doesn't require any kind of collateral for actual loan approval. So unsecured financing is financing that's not secured by any kind of asset, by no collateral. And that's what it means by being unsecured. There's no collateral there securing the loan. It's unsecured, meaning there is no asset, there is no collateral being pledged as security. So nothing is being pledged as collateral for the debt, and if the borrower defaults, the lender can pursue the borrower legally, so they could sue the borrower, but they can and take their assets that way, but they don't just have the right to come and just take an asset that you pledged because you're not pledging any. So with a collateral, or with a secured financing, then what happens is you might say, okay, I have a piece of equipment and I'm using this as security. Well, if you default, they just come take your equipment. Because you've already used that as collateral, they can come take it without needing to involve the courts. But with unsecured financing, they could still sue you if you default, but they don't have the right just to take your assets. They would have to go through the courts to actually be able to do that. So it's also important to note that we talk about business failure statistics because this ties into the risk of secured versus unsecured financing. So in the business world, according to the Bureau of Labor and Statistics, about 1 out of 5 businesses fail within the first year of operation. About 50% have closed their doors within about 5 years. And in 15 years, 75% of businesses that open will have closed down for good. So there's one thing that all statistics without a doubt show. Most businesses do fail. And because of that, the business lending space is very, very risky. Okay, so with secured financing, the lender would just take back the asset that was pledged as collateral if you default. So this helps them really get back, their money quickly, or at least a part of it. Again, using the equipment example, I mean, if you pledged equipment as collateral and then all of a sudden you default, well, they could just get your equipment, sell it, and get back a large portion of what they borrowed or what you borrowed. So again, they don't have as much risk because you're using something as security. And because of that, if you look at collateral based or asset based type of funding, then what you'll find is that rates are ridiculously low. You can get interest rates of 2, 3, 4, 5% even with bad credit if you are pledging collateral. In the business world, collateral is key. If you have collateral, if you're going with secured financing, it's much easier to get. And also you're going to get really, really, really good terms on it. Okay, but unsecured financing is the most most risky type of business lending because if the borrower defaults, the only way the lender can get back their money is to pursue legal action. And legal action can be costly and not something any lender really wants to pursue. So this is part of why unsecured financing is so high risk and why so many of the rates that you'll see are much higher than what you'll find with secured financing, because just hands down, it's already involved in a risky space, which is business lending. And the fact that there is no collateral being pledged makes it one of the highest risk type of business financing that's really available. So let's dive in and talk a little bit about unsecured financing. I wanted to first talk to you about secured versus unsecured and talk to you about risk, because it's important to note that if you want the best terms out there, you do need to have collateral. But if you don't have collateral, you could still get a lot of kind of financing that we're going to talk through. Just expect that you're going to pay a little bit higher fees and a little bit higher rates and terms than you would on normal secured financing. So unsecured business credit cards. Well, most banks offer unsecured business cards. I mean, you can go into a Wells Fargo or Bank of America and get their actual credit cards. A lot of credit card companies offer these too. And most of them do report to the consumer credit reporting agencies. So this is always a question you want to ask. If you're going to your bank to get a credit card, you need to ask, do they report to the business or consumer reporting agencies? Now, most of these, really, I'm not going to say most. I'll say all of these that you're going to find are going to require a personal guarantee from you too. Okay, so that means that you're going to be liable if you ever default. You're going to personally be liable. Now, you can get approved usually for one card max, because what happens is the lender looks, and if they see that you have 2 inquiries on your credit report, within the last 6 months, they'll deny you. So you could walk into Bank of America and get a credit card, but you're probably not going to be able to turn around and walk into Wells Fargo and Chase and get more credit cards, because once they see that you have 2 inquiries on there in the last 6 months, they won't approve you. So although you can go to your bank, you can go to some of these cards I'm going to introduce to you and get approved, you're probably not going to get approved for 1, 2 at the absolute max, because the inquiries alone, no matter how good your credit is, will prevent you from getting approved for even more cards. So Chase has a great program, a Chase Ink Plus card. You get 50,000 points when you spend about $5,000 in the first 90 days. That's about $625 in points you're getting from them just because you're actually using the card, which is pretty cool. There's no annual fee, 15 to 24% APR with a 19.24% APR on the cash advance. Now, if you want to find this actual card, you just Google Chase Ink Plus. You'll find it. It's one of the top things that will come up in your search, and you could dig in and get a little bit more details. Now, there's also a Chase Ink Cash business card, and that's Chase Ink Cash business card. So you can also go ahead and Google that and find more information. You get 5 points for every dollar you spend on office supplies, 2 points for every dollar you spend on gas, and 1 point for every dollar that you spend on everything else. So it's pretty cool. This is heavy on points, which means you can get a lot of points, which translate into other benefits, even including cash back on these type of accounts. So 13 to 25% APR, and you're going to pay a little over 20% APR on the actual cash advance. And again, that's called a Chase Ink Cash business card. Now, Capital One has 3 really good business credit cards out there. And I'm not introducing you to all business credit cards that are out there. The truth is there's a lot of them. You could find thousands. But in all of our research, I'm really giving you access to about 8 or 10 of the absolute best ones out there. So you know the ones that have the most benefits, including points and incentives, those type of things, the lowest rates, the lowest fees, and the lowest rates for cash advances. So Capital One offers a few of these cards. Capital One Spark Miles for business, the Capital One Spark Cash Select for business, and the Spark Miles Select for business. Now these, you get about 1.5 to 2 miles per dollar that you spend. Your rates are about 12 to 21%, and you're usually paying about 25% for cash advances. Okay, and also American Express has some really good business credit cards. The American Express Simply Cash business card, the Enhanced Gold Rewards card, and Blue for Business card. Now these will also give you about 1 to 3 points per every dollar spent and about 11 to 20% APR with 23% for a cash advance. So between these, I've given you really, I think, 3 good Chase ones, or 2 or 3 good Chase ones, 3 American Express, 3 Capital One. These are the best ones out there in the lending arena that will give you the most bang for your buck and also give you the absolute best terms that are out there. So there's another program out there that's really one of our most popular programs that we see clients go with called the Unsecured Business Financing. So typically, as we talked about, when you apply for a credit card, you put an inquiry on your credit report. And when other lenders see this, what happens is they won't approve you for more credit because they don't know how much other new credit you've recently obtained. So the problem is, you walk into Bank of America, you get a credit card. They give you a credit card. They put an inquiry on your credit report. Now you walk into Chase and try to get another one. Well, Chase doesn't like the fact that they see that Bank of America inquiry on your credit, because that could mean you got approved and the account's not reported. It could mean that you didn't get approved and there's something they should be alerted or aware of. Or it could mean that you got approved and the account's reported on the business credit reports and they don't even know it exists. So there's all kinds of concerns when a bank sees another bank's inquiry on there. They know you're applying for other credit cards. They don't really know what the outcome is, so that makes them very hesitant to give you approvals for more credit. So they'll usually only approve you if you have less than 2 inquiries on your report within the last 6 months. Even if you have an 800 credit score, you're probably not going to get approved for more than 1 or 2 cards max, because they see these inquiries and they get skittish and they won't approve you because they don't know how much other credit you've actually been issued. But with unsecured business financing, you're working with a lender who specializes in securing these kind of business credit cards. So this is a really rare, very little known about program that few lending sources even offer. From what I know, there's only about 6 lending sources in the entire country that even offer this unsecured business financing program. But it's extremely rare. It's also extremely cool because of the major benefits that it provides you. One of the benefits is that you can usually get up to 5 times the approvals that you can get on your own. And the reason for that is because they know the sources to apply for, the order to apply, and can time their applications so the card issuers won't decline you for the other card inquiries. So here's what happens. You walk into Bank of America, you apply, they give you a credit card. You walk into Chase, they decline you because they see Bank of America's inquiry. Well, with unsecured business financing, or UBF, the lender you're dealing with, all they do is get people business credit cards. So they know who to apply to. And it's not Chase. It's the regional office of Chase that will give you the best deal. They know the regional offices of, Bank of America, of the big players, but they also know small credit unions and small banks you've never heard of. So these sources know, based on your profile, who's going to give you the most amount of money, the sources to actually apply for. They also know the order to apply, the order of these accounts that you should actually be applying for, and they can also time their applications so these inquiries aren't a problem. And because of that, instead of getting 1 card like you get at your bank if you try on your own, you could usually get 3, 4, or 5 cards, which gives you up to 5 times the amount of money that you'd ever be able to get on your own. Now, the result of their service is that you usually get up to 5 cards that mimic the credit limits of your highest accounts now. That's the way all credit cards work. So people come to us all the time and say, I want a $50,000 credit line. I have no collateral. I have no cash flow. Okay, well, that means it's going to be based on your personal credit. Let's look at your personal credit. Well, their personal credit shows they have a credit card limit of $10,000. Well, I'm here to tell you, if you have proven that you can manage 10 grand, nobody out there is going to give you 50. It doesn't work that way. They might give you 9. They might give you 10, they might give you an approval for 11,000, but they're not going to give you an approval for 5 times the amount of your highest credit limit. Whenever you get a new credit card, your credit card limit is going to pretty much mimic what your highest card limit is now. And it's the same with the unsecured business financing program. You're going to get about 5 different cards that mimic your highest limit. So if your highest limit account now is 10 grand, well, you could walk into Bank of America and maybe get a $10,000 credit card. But with UBF, you could get 5 of those $10,000 credit cards, so you could get like 50,000 in money in that example. So multiple cards also create competition. So what happens is you have a card with Bank of America, a card with Chase, card with a small credit union. Well, then you go to Bank of America, go, hey man, it's 6 months has passed. I've been using this card, but Chase and this other credit union gave me much lower rates and much higher limits. So I think I might want to cancel this card. And they say, well, wait a minute. Well, let's give you a higher limit. And in a lot of cases, what will happen is in 6 months, they will actually increase your limit. They will raise your limits because they see that other companies have approved you and have given you higher limits. So you can actually use them and kind of pit them against each other to actually create competition to get even higher and higher limits as you go. And with UBF, they actually get you, again, 3 to 5 business cards that report only to the business credit reporting agencies. So this is a really big deal because if you go into your bank and you get a Bank of America card, you're personally guaranteeing it, which is okay because you're not basing it on your business credit, so that makes sense. But the problem is that most of those accounts you're going to get at the banks report to your consumer credit. Now that's a big problem because 30% of your total credit score is based on what percentage of your credit limit you're utilizing. So if you go and get a credit card with a limit of $1,000 and you put more than $300 on that credit card, you lower your consumer credit scores. So having this report to your consumer credit's a big problem because if you're using it for business purposes, you're more than likely utilizing more than 30% of your limit and you don't want to plummet your consumer score. And I've seen consumer scores drop over 100 points just because somebody overutilized one of their accounts. But these accounts that you can get with the UBF program only report to business credit. That's a really big deal because what happens is you're actually building your business credit as well as actually getting new credit. So not only are you getting money, but you're building your business credit in the process. So what happens is 3 to 4 months down the road, now all of a sudden you got a business credit profile that's linked to your EIN, and if somebody pulls it, they see 5 credit cards with $10,000, $12,000 or more limits on there, and you have good credit profiles, you have good credit scores. Now you can start using your business credit profile to get more and more and more money. So UBF is fantastic because not only do you get 5 times the amount of cards you usually get, but you're also then turning around and building your business credit in the process, helping you get even more money as your business credit gets established. And you're using these cards against each other to compete to give you even higher limits as time goes on. The lender can also get you lower rates. So with these kind of cards, you're usually getting 0% for something for about 6 to 18 months, something you normally wouldn't get on your own. And then after that, you pay normal rates, 5 to 21%, 20 to 25% for cash advances. That's no different than any of those other cards I just showed you. And they'll also get you the best card for points, the best incentives, the best rewards. So again, that's really the benefit of working with unsecured financing. They could do all of these things. They could get you 5 times the amount that you'll be able to get on your own. They'll be able to get you accounts that report to the business credit reporting agencies, not the consumer. They'll be able to get you the best incentives, the best points, the best rewards, 0% intro rates. All these things are things you would not be successful trying to accomplish on your own. And just like with anything else, I mean, there's a lot of benefits of working with a source who specializes in this area. The results are just going to be better than if you go at it alone. Look, you can go out and try to get a credit card, but you know nothing about it. So you're going to look at thousands of cards, get confused, try to find the best one, apply, then you might try to go get your second or third and you get shut down to do your inquiries. But when you work with a source that this is all they do is get credit cards for business owners, well then they know the ins and the outs. They know the regional lenders. They know the small banks on top of the big banks and how to get you the most money and the best terms and the best intro rate and who gives you the best incentives and points. Those are all things you don't openly know. So when you work with a source like this, you get the huge benefit of their knowledge helping you get all those other benefits. And again, approval limits will mimic that of your personal cards now, the same as when we talked about regular credit cards earlier. And you can usually get approvals from 2 to 50,000. Depends on what your limits are now. So if you have credit cards with your highest credit card limits 10 grand now, you could probably get 5 of those, which is 50 grand. If your highest credit card limit is, 20 grand now, well, you could probably get $100,000. So remember, you're usually going to get 3 to 5 cards. So that means you can get about 5 times the highest amount of, or the amount of your highest credit limit. And we've seen people get approved as high as 150,000 in money for their business. So to get approved for UBF, just like regular business credit cards, you have to have really good credit, 700 plus type of credit scores, no derogatory items. You have to have open revolving accounts now, obviously, because they're going to approve you for limits that basically mimic your existing limits now. So it's important that you have open revolving credit now, or they won't approve you for more revolving credit. And again, you've got to have less than 2 inquiries in the last 6 months for them to actually be able to approve you for UBF, the same as regular credit cards. Lenders will charge a 9 to 12% success-based fee. Okay, just like if you go to SBA or get an SBA loan, they're going to charge, 4 points between the banks and SBA. Most business financing charges points. With this program, you're going to pay about 9 to 12%, depending on which one of those 6 sources out there that you actually use that lends in this area. You're only going to pay the fee off what you secure. So remember, you're getting a lot of extra benefits here, which is why there's a fee. And sometimes people say that, well, look, I've got, credit cards before and I never had to pay a fee. Well, yeah, you can go get a credit card now and not pay a fee. But in order for you to get this program, work with a lender that specializes in this area, get 5 times the amount you normally get, business credit accounts that report, not consumer accounts, get 0% APR for 6 to 18 months, get all the best incentives, rewards. In order to get all of these benefits that you're getting, you're going to have to pay a fee. That's the way all lenders actually work in any area. We had a client that didn't want to pay the fee, said, I'm not going to pay the fee. So we said, we'll help you get the credit without the fee. So we helped put together everything he needed. He had 800 credit scores. He went to his bank. He got approved for $12,500 card. Well, with UBF, he was pre-approved for $75,000. This is the difference. In his case, he didn't want to pay and got about a fifth of what he could have got using UBF. So those are decisions you have to make. I introduced you to a lot of business credit cards you could get probably one of. But again, with this program, you're going to get 5 times more money and a lot more benefits. But just like any lending program where a lender's involved, you're going to actually be paying a fee. And in this case, it's about 9 to 12% only off the money you actually secure. So you can also get approved using a guarantor. You can even use multiple guarantors to get more money. So if you have a relative, a partner, somebody that wants to sign as a personal guarantor, you can also get more credit under their name. You could use them to get the original credit, or you could use as many guarantors as you want to get more and more money. So now we've talked about UBF. It's a great program, one of our most popular, because again, you can get it if you're a startup. You can get it if you have no collateral. You can get it if you have no cash flow. So it's very hard for a startup business and somebody that has maybe a $10,000 limit credit card to turn around and get $50,000 within 2 or 3 weeks. That's almost impossible in any other program. But with UBF, it is possible. You are able to do that even as a startup, even with no cash flow, even if there's no collateral, which is why our clients love it so much. But there's another UBF program that does have consumer reporting. So we just talked about the main unsecured business financing program that doesn't have any consumer reporting. It's just business. But with this one, these cards actually do report to the consumer reporting agencies. They function exactly the same as the other ones we talked about, but they report to the consumer reporting agencies. They're consumer credit cards versus basically business credit cards. So they provide similar benefits, 0% APR, 5 times the amount of approval that you get on your own, but they're just a lot easier to qualify for. So you can get approved with a 680 credit score, in 5 inquiries in the last 6 months instead of 2. You can have an older bankruptcy on the credit. You can have other derogatory items. Okay, these are much easier to get approved for than the regular UBF we talked about. So if you're saying, well, why would I want accounts that report to the consumer reporting agencies? Well, you and I are on the same page. I think you should get accounts that build your business credit, not consumer credit. But with this program, if you can't qualify for the business cards, this is a great substitute program that gives you a lot of the benefits, but again, doesn't require as stringent requirements as the other program we just talked about. And Another thing with this program is that you can get more money on top of what you got with UBF. So even if you did qualify for the business cards, let's say you got 50 grand and you say, I want another 20. Well, you could then come in and get these consumer reporting cards, usually from the exact same source that offers you regular UBF, and you could get even more money. So these are a great option for you if A, you want more money from just what the UBF will give you, or B, you can't qualify for that original program that we actually talked about. Now, here's another option. We're getting into a third option, and this is an option that gets you money based on business credit. So far, all the options we've talked about are personal credit based. Okay, the personal credit card or the business credit cards, the unsecured business financing where you're getting 5 times the amount that you get on your own usually, and the business financing that reports to consumer agencies, all of these look at your personal credit to get you actually approved. But there's another program that actually can get you approved using business credit. So what the question then becomes, what happens if your personal credit isn't good, if you don't have a guarantor? Well, that's when building business credit just makes a ton of sense. Because even if you have good personal credit, building your business credit helps you get even more money and without a personal guarantee. So using business credit to get money makes a ton of sense, because even if your personal credit is trashed, it's garbage, you could still build business credit even as a startup and get cash credit. Even if you have good personal credit, building your business credit still helps, because then you can get even more money without a personal guarantee. So business credit basically is credit that's in a business name. It's linked to your business EIN number, not your social security number. So what happens is when done properly, you could get business credit without a personal credit check, without a personal guarantee, something that so far no option we've talked about gives you. Now, obviously, this is going to breed skepticism. When you say, okay, man, you just told me I can get money regardless of my personal credit and without a personal guarantee. How does that make sense? But if you think about it, it makes perfect sense, because every large company in this country uses business credit to get money. For example, when Steve Jobs was alive, or when Bill Gates was still the CEO of Microsoft, these guys weren't personally guaranteeing their company's debts. Okay, no big CEO does. What happens is their company builds its own credit profile and score, and then that business uses its own profile and score to get more and more and more money. Whether you look at Walmart or Flying J or Publix or any of the biggest companies in the United States, they all follow this. But I'm going to tell you something else most people don't know. Anybody can get business credit. You don't have to be big to get it. It's just usually bigger companies have CFOs that know how to do it. So I'm going to walk you through the steps to do this, because again, your business can stand on its own. Just like you have a credit profile that's linked to your social, your business has a credit profile that's linked to your EIN. And once you learn how to open up that business credit profile, then you can start getting a lot of money under your business name that's not linked to you personally. So business credit's credit, again, it's in a business name. Okay, so most consumer credit starts with secured credit cards or an account that has a well-established cosigner. Usually, when you first start building your credit, you either do it with small credit cards, secure credit cards, or a cosign loan. But cosigned accounts and secured accounts, they're just not widely used or popular in the business world. Instead, you're going to start building a business credit profile with what is known as a vendor account. Now, vendor accounts are accounts that typically offer terms such as like net 30. Okay, so if you get approved for $1,000 in vendor credit and you use 1,000 of it, well, then you'll need to pay 1,000 back within 30 days. If it was a net 30 account, you got to pay the full amount back within 30 days, not a minimum balance like you can on a revolving account. So a net 30 account would have to be paid back in full in 30 days. A net 60 account would be paid back in 60 days, for example. So unlike with revolving accounts, you have a set time you must pay back what you borrowed or the credit that you actually used. So to start your business credit profile the right way, you need to get approved for vendor accounts that report to the business credit reporting agencies. So once you've done this, you can then use the credit, pay what you used. Okay, then the account gets reported to Dun & Bradstreet, Equifax, or Experian. And once reported, you have trade lines, you have an established credit profile, you have an established credit score. I just basically described to you exactly the same process that you used with consumer credit. You got consumer credit. Maybe you got a secured credit card, you used the card, you paid the bill, they reported the payment to the credit reporting agency, and then boom, you have trade lines, credit profile, and score. Exactly the same applies in the business world. It's just much faster to be able to do this than in the consumer world. In the consumer world, your account won't even count into your score for 6 months. But in the business world, you could have your business credit completely established in 90 days or less. All you have to do is get vendor accounts, use them, pay your bill, and then they report and you have trade lines, profile, and score. So using your newly established business credit profile and score, you can then get approved for store credit and even get cash credit without a social security number or personal guarantee. And this is possible because now your EIN credit profile is established and can stand on its own. So if you leave your social off the application, then what happens is the credit issuer pulls your EIN credit, sees a solid profile score, and then approves you for revolving credit. So some people think just because they have an EIN, they can go in and get business credit. That's not the case. But when you start with vendor credit, then you have a profile and score. And once a credit issuer sees that you have a good profile and score, then they'll start approving you for business credit without you even needing to supply your social. So you'll have to have 5 payment experiences to start getting approved for revolving store credit cards using your EIN. Okay, these are cards like Best Buy, Lowe's, Amazon, Apple, Walmart. Most major retailers offer store business credit cards. Okay, then you got to have about 10 total payment experiences to get approved for cash credit such as Visa and MasterCard type credit. These are cards you could basically use anywhere. So a payment experience is the reporting of an account to a business credit reporting agency. So if you have an account that reports to Dun & Bradstreet, that's a payment experience. But if you have an account that reports to Dun & Bradstreet and Experian, that counts as 2 payment experiences. Okay, and to get the cash credit where you need 10 payment experiences, you should have one of those store credit cards have a $10,000 limit or higher. But that's not hard to do. Okay, most of our clients get $10,000 limit Dell type credit cards within 3 to 4 months. So usually it takes you about 90 days or so to be able to build 10 payment experiences, get one of those with a $10,000 limit, then you can actually start getting real store credit. But you've got to start with vendor accounts that are starter vendor accounts, okay? Because there's a lot of credit issuers that won't give you credit if you have none. But starter vendors are ones who will give you initial credit even if you have no credit, no score, or no trade lines now. So you got to keep in mind, stores like Staples will not give you initial starter credit, so don't even try applying. This is one of the biggest mistakes I see people make when trying to build business credit. They have done established, they go into Staples, they apply, they get denied, they say, well, business credit doesn't work. Well, you have to keep in mind, if you went into Staples with no personal credit and you tried to get a credit card, they would deny you because Staples needs to see that you have credit to give you credit. Most stores are like this. But if you went and got 3 secured credit cards on the consumer side and you walked into Staples and said, give me a credit card now, Staples would approve you. Same thing in the business world. When you have established business credit profiles, scored trade lines reporting, then stores will start to approve you in a lot of cases. Some stores, like Staples actually, have time in business and also have revenue requirements. But most retailers do not have those requirements. They will approve you just because you have that EIN established credit. So the key here is you got to get real starter vendor accounts like Lachlan and Associates, and they will give you credit when you have none, helping you establish your business credit profile and score. Now, Lachlan deals with corporate setup and compliance. They report to Experian, and all they require is that you're listed with 411 and have an EIN to get approved. Plus, they report your account to the business reporting agencies within 30 to 60 days, and they give you net 30 terms. Now, another one is Quill. Quill offers office packaging and cleaning supplies. They report to DMB. And in order to get approved with them, they require that you place an actual order. So you place an order, you apply for credit. Usually if you have no credit established, they're probably going to deny you. Then what you need to do is pay for your order using your own credit card money, whatever, and then do it again. Apply again for credit and go in with a $50 order. They might deny you again. If you do this 2 or 3 times, once they see you're going to come back and keep buying from them, then they'll usually issue you an account. So don't think you're going to go into Quill with no credit and get approved. You're probably not. They're probably going to have you place 1, 2, or 3 orders before they'll approve you, but they will typically approve you. Uline's the same way. They sell shipping, packaging, and industrial supplies, report to DMB, and you've got to have your actual DUNS number with them to get approved with Dun & Bradstreet, and they will ask for 2 references that are bank and personal, or bank or actually 2 business or bank references. Now again, just like with Quill, your first few orders might need to be prepaid to initially get approved for net 30 terms. Look, most vendors have a trade-off. 95% of trade vendors don't report to the business credit reporting agency, so it's hard to find ones that do. When you find ones that do, most won't report, most won't approve you if you're a brand new business or if you have no credit established. These will, but there's a trade-off. Lachlan sells services you might not need, but you need to buy the services to be able to build the business credit. Uline, Quill, they sell services you're obviously going to need, office type supplies, but they might make you place a few orders to get business credit. Regardless, this is the hardest part of building business credit and a very small sacrifice considering the massive benefits you get by having an established business credit profile and score. So once you have 5 of these vendor accounts, these payment experiences, you can start to get store credit. And again, Office Depot, Staples, Lowe's, Home Depot, Walmart, BP, Chevron, Sam's Club, Costco, Best Buy, Amazon. Most major retailers offer business credit accounts like I'm describing here. These type of business credit store accounts are usually 10 to 100 times higher limits than consumer credit. This doesn't come from me. The statistic comes straight from SBA that business card limits have about 10 to 100 times that of consumer card limits. They function the same as consumer credit cards, but they don't report to the consumer credit reporting agencies. Instead, these store accounts report to the business bureaus, helping you build your business credit to get more and more money. Now, you can be approved with no personal guarantee in most cases, and with initial business credit established, you can get approved leaving your social off the application. So when it comes to a guarantee, a lot of sources like Amazon will give you a no guarantee account if you have a handful of these vendor accounts. They'll do it right away. They'll do it within 3-4 months. Some like Staples will actually want you to be in business for 3 years or have a lot of credit established before they'll give you a no personal guarantee accounts. So almost all major retailers will give you the option of a no personal guarantee account. Some of them will make you have longer time in business and more revenue, but most of them will not. And again, since you're leaving the social off the application, there's no personal credit check involved because they don't even have your social to pull your personal credit. So now let's talk about the unsecured cash credit. We talked about vendor credit, then you moved up to store credit. Once you have 10 payment experiences, then you can get cash business cards. These are Visa, MasterCard, American Express type cards that you can use anywhere. They work very similar to that UBF program we talked about earlier, but with these, there's no credit check or personal guarantee. That's really one of the only differences. So with the unsecured business financing program we talked about earlier, those require a personal guarantee because you're using your personal credit for approval. These use business credit for approval and don't require the personal guarantee or credit check. So again, it allows you to get cash credit regardless of your personal credit quality and without having personal liability, which is a really big deal. So now let's talk a little bit about high limit credit lines. Okay, this is what we find most people actually want. So some conventional banks and private lenders offer really high limit credit lines. These could be $50,000 to $250,000 limits. Okay, these are the types of accounts that I see most business owners truly want. Most people come to us and say, look, I want a $50,000 credit line. And they want a credit line for a reason. They don't want to borrow $50,000 because they don't need all of it now. They want to use part of it now and have access to regular money or more money as they need it as they grow. That makes a lot of sense. Having a working capital credit line makes a ton of sense for that reason. Okay, approvals require good personal credit if you're talking about credit lines, period. You need to have excellent personal credit similar to unsecured business financing. And you must have good business tax returns for 2 to 3 years showing profits increasing from year to year. Here's the kicker. Okay, here's where I might be telling you something you might not want to know, but it's the reality and we got to face it. If you really want a high limit credit line, not only do you need excellent credit, it's a full doc. You've got to actually have financials, and the amount of the net revenue on your actual, or the net profit I should say, on your tax returns is equivalent to the amount you're going to get approved for. Simple as that. So if your company shows that you made $100,000 in profit last year, you might get a $100,000 credit line. If it shows you made $5,000 in profit, you're probably not going to get approved for a credit line. So these are a little bit tougher to get approved for, okay? Because, you've got to have good personal credit and it's full doc. You've got to have financials. Some sources even require collateral, but you've got to supply a personal guarantee for these, unlike the business credit accounts that we actually just talked about. But one thing to keep in mind is we've talked a lot about credit cards. Now we're talking about credit lines. What's the difference? The funny thing is so many people insist they want a credit line and not a credit card. But when I ask them what the difference between the two is, most people don't even know the difference between credit cards and credit lines. And that's because they really function almost the exact same. Well, one big difference is that credit cards offer those 0% intro rates that we talked about. Credit lines don't offer that. But then again, you can use credit lines to get cash advances without paying usually 21 to 25% that you'd actually pay with the credit card. This is about the only main benefit on why people would want to go with a credit line versus a credit card. You can get cash out instead of just making purchases. If you're just making purchases, then credit lines and credit cards are basically the exact same thing, except credit cards have 0% intro rates and credit lines don't. They're even better. But if you want to take cash out of that, you want to get $5,000 in cash to buy stuff you can't buy with credit cards, well then a credit line probably makes more sense because again with that you don't have to pay as high as a cash advance limit as you would with credit cards. And credit lines are single accounts with higher limit, which could be good, but again, credit cards have lower limits, but you get multiple accounts. So that breeds the competition that gets you higher limits through time, that establishes more trade lines. So when it really comes to actual flat out benefits, then absolutely one of the best things you could really look at doing is going with credit cards. Credit cards give you a lot more benefits than credit lines. The only benefit a credit line gives you over credit card is being able to get a cash advance, but it's not worth having to go into a full doc situation versus no doc. Having a higher limit and low rates for cash advance are the main actual benefits, but again, the drawback is it's full doc, whereas other cards we've mentioned are no doc. And most business owners we see want to go with the fastest, easiest money. Credit cards make a lot of sense. Unsecured business financing, it reports to consumer agencies. Any of those we talked about make a lot more sense than credit lines because credit lines have to go full doc. You need good credit, you need financials, and those are just much tougher to actually get approved for. So unsecured cash advances. Cash advances, also known as merchant advances, revenue lending, and cash flow financing are another great way, an easy way to get money because you can get approved even if your business is in business for 1 year or more, and even if your FICO is as low as 500. So this is about the only type of unsecured financing that doesn't require good personal or business credit for actual approval. Okay, almost all others do require good personal credit. As you saw, we just talked about a lot of them. Business credit, you got to build your business credit and it requires good business credit to get approved. All the other ones we looked at will look at your consumer credit. But with cash flow financing, they don't care if you have bad credit. You can still get approved. So lenders will look at your most recent 6 months of bank statements to determine your approval. You should have revenue of $120,000 a year. That's about 10 grand a month or more, and have 10 or more deposits monthly to actually be able to get approved. So they're not looking for a realtor who actually has 1 or 2 deposits a month. They're looking for somebody that has a lot of little deposits a month for this program. And they want to see you manage your bank account responsibly, that you have some money left over at the end of each month, that you don't have a bunch of NSF charges on your actual credit report. So if you meet this criteria, you could usually be approved for money in less than 72 hours. And again, we find that business owners want the fastest, easiest money. And with this, you actually do that. You can get money very quickly. We actually had a client called us on Monday, needed money by Wednesday to meet payroll, and we were able to do that, something you can't do with most funding programs. And usually you're getting 3 to 6 month terms, and you can refinance when half of your loan is actually paid down and get longer terms. So here's what happens. Statistically, 77% of our clients come back and get more money. So the first time you get an advance, they might give you a 3-month term and a much higher rate. Okay, then when you pay it half half of that down, which let's say is a month and a half in. Then they come back and say, let's give you even more money. We'll lower the rate, lengthen the term so you could get a lot more money without spending much more at all in payment. So you come, they give you 50,000, you pay down 25, they give you another 50. Now you've borrowed a total of, 100 grand. You pay down 25, so you still owe 75. They take the 75 you owe, they lengthen the term, they lower the rate, and you can end up having your payment increase very mild or very small amount and still get a bunch of extra money. This is really easy to get money, especially after you've secured your first one. But look, rates are high. It's a cash advance. Okay, it's the highest risk money you're going to get. There's no collateral required. They don't care about good credit. So it's really high risk. Okay, it's easy to qualify for, but you're going to pay for that. And again, if you're lower risk, your rate's going to be lower, but you're usually going to pay 15 to 45% on this kind of money. And again, once you prove yourself, then your follow-up or subsequent fundings will actually give you much better terms. Okay, so again, this is what I tell. I had a buddy of mine. Actually, he's not a buddy. He was my teacher in high school, and I saw he put something on Facebook about needing money. And I talked to him and I said, hey, based on what you put out there, I think you can qualify for money. Tell me a little bit more of what you're trying to do. He said, I'm looking to have money just to get us through the next few months. And this is what I said to him. I said, well, you can get cash flow based financing right now, but it makes no sense for you because this is something you would get money to reinvest into your business to grow your business. And if you're paying higher terms on money that's going to make you a lot more money in the short term, it makes a ton of sense. Okay, but if you're not, you're just getting money to have sitting around, this doesn't make sense. And sure enough, about a week later, somebody else had pitched him this and he was freaking out about how high the rate was. Well, I knew that that would happen, and this isn't the kind of financing that somebody should be offered or somebody should take just to have money laying around. But we had another company that owned an energy drink company, and they outsourced a lot of the packaging, a lot of the actual putting the drink into the can. And they realized that they could do it themselves for a fraction of the money and increase their profits by 60%. Well, that made a lot of sense for this program. Yeah, they were going to pay higher rate on the money they borrowed, but they were immediately going to increase their revenues by 60%. So it made a lot of sense. So when you're getting money and reinvesting it into marketing, advertising, expansion, building or buying a new franchise or buying another company, if you're using the money to do something that's going to increase your revenue, this makes a ton of sense. It's fast, easy money, regardless of personal credit. But if you're just looking to get money laying around, then the credit card programs we've talked about make a lot more sense to you because you're only paying on what you actually borrow and the rates are a lot more manageable. So I hope you got a lot of good information out of today. We talked about the main, I just went through with you the absolute main legitimate funding programs that exist today that are completely unsecured. We talked about unsecured business cards. We talked about unsecured business financing. We talked about unsecured business financing with consumer reporting. We talked about business credit accounts and vendor credit, store credit, cash credit. We even talked about high limit credit lines, and we even talked about how to get cash flow based financing. So as I said in the beginning, whether you're a startup, whether you have good credit, whether you have bad credit, we talked about a lot of options that should work for you. So if you have any other questions on these are all programs we offer. We're, I think, one of the only sources that exists that offers all legitimate funding programs instead of just one or two. Feel free to reach out to us. Let us know how we can help you. Our direct number is 877-600-2487. That's 877-600-2487. Feel free to send us any questions you have. info@creditsuite.com. That's info@creditsuite.com. And also, don't forget, I do have a free guide for you that's 4 steps on building your business credit. It's easy to get. To get it, all you have to do is text the letters EIN to the number 855-982-1820. That's the letters EIN to 855-982-1820. Again, this is Ty Crandall. Thank you very much for joining me today. I hope you got a lot of information about how to get unsecured financing for your business.